What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be taking a look at Micron stock because the stock just fell roughly over 16%. And as you can see, I did buy a couple shares just to get a position started. And we're going to see where this goes. But if the stock is down another 5 or 10% tomorrow, well, then I'm going to buy more shares. But as of right now, Micron is only a $97 billion company. And the reason the stock fell is because they lowered their guidance for next quarter. It was originally supposed to be, I believe, $9 billion of revenue, and now they're only going to do about eight or seven and a half or so. I think it's around eight. So roughly a 12% decrease or so in revenue. And so the stock fell roughly the same amount. But the thing is all the different people and companies that lowered their price targets, they all lower them to numbers that are well above the current stock price. So as you can see, $120, $130, it's still well above where the stock is trading today. And if you look at the last couple of years, especially the last year, around this price point has been pretty much the bottom, right? And so that's why I just feel like it's getting to a very attractive valuation. And then I read through their entire investor presentation, and most of it just sounded like pretty good news to me. I mean, there's a couple things where certain parts of their business are slowing, but I mean, there's other parts that are growing. And I mean, this is a company that has Nvidia as one of their customers, and they talked about even though one part of their business is slowing, the AI portion is definitely they actually raised their guidance for the AI business. So I just think it sounds like they have quite the moat here. On Qualtrim, I read down here with the different investment risks as well as competitive advantages. And to be honest, the moat and the advantages just sound way stronger to me than what the risks are, because a lot of these risks are they're just kind of far-fetched. They don't seem very realistic. So I mean, this is saying, in a global economic downturn, it could impact various markets. I mean, okay, I don't know how realistic or relevant that is right now. And same thing with this. A portion of their growth is driven by data center demand, particularly for AI, and a slowdown in AI could change this. I mean, I think that's almost impossible, really. I mean, they're talking about the complete opposite, that they just raised guidance for their AI. And then you read over here, I mean, they're saying one of their products is leading in power efficiency and capacity, offering 20% lower power consumption and 50% more capacity than competitors. And in there, I'm pretty sure I just read in their investor presentation, it's actually 60%. I believe the numbers were 20% and 60%. No, I'm sorry, it was 50. Okay. 20% lower power consumption, but 50% higher memory capacity. So I just think it doesn't sound like a really that bad of a situation to me. And with the valuation being this cheap, it just seems like a good risk to reward profile to start buying this stock. So I'm going to start buying. And I mean, if this goes to 75, $80, then I'd be happy to make this into a bigger position. But right now we're looking at, I mean, and look at the revenue growth, nearly 39% this year. Now, these numbers are probably going to come down because they just lowered their expectations. But still, I mean, let's say it comes down to 35% and then next year is 28%. I mean, to be paying three and a half for four times sales for this is very cheap. Look at EPS. Now, the last couple of years, they've struggled with profitability, right? Let's go to the last couple of years. 2023 was negative. 2024, and that's the other thing with when I read through the investor presentation, the last couple of quarters, they've been making lots of improvement. So 2024, only 778 million of net income, which is not great, right? The number should be closer to 6 billion or 7 billion, but they're making progress. The progress is there, and analysts have them look at the jump in EPS. Analysts have them doing $8.9 EPS and then over $12 EPS next year. So Qualtrim puts the forward PE ratio at 10, which is insane. That is insane. You don't see that ever for a company that like this. Free cash flow yield of 3.9% is solid. Margins of 13% solid. The cash to debt ratio is not great, unfortunately. That's a bit of an issue, but luckily interest rates are coming down. So I mean, really, that should actually help them out a little bit. And then here's price to sales. This is 2 days old, so it was 4.8 2 days ago. But remember, I mean, you have to take off 16% off of that because the stock is down 16% now. So just well, now it's down almost 17%. But I mean, it's just the valuation is so cheap. You're only paying $96 billion for a company that's about to do $35 billion in sales and then maybe 45 billion next year. That's going to be a price to sales of, I mean, right now it's about a 3, but it's going to be close to a 2 in a year from now. And then, I mean, if this EPS actually happens, we're looking at $9 to $12 EPS. That, I mean, the stock's going to be 150 bucks or 200 bucks in a year from now. So that's the way I'm looking at Micron. I think the risk to reward is very attractive here. I don't see a lot of downside. I find it hard to believe that it's going to fall that much more. For it to come down to, I don't know, $60 or something, I don't think that's too realistic right now. I think there's so much bad news priced in. And remember, all the price targets from the analysts, they're all still around $130, $120. So that's where I see the stock going really in the next couple of months. That's what's probably realistic. So that is my analysis for Micron. Let me know what you guys think down below, and I will see you in the next video.